What's up everybody and welcome to Let's Talk Money. I'm Nikolay Timoshchuk Jr. and I'm going to give you the 5 simple steps to getting rich off of the stock market. No, rewind real quick. 5 simple steps. That is not what I'm going to do, and you should not go into the stock market thinking you're going to simply get rich off of it. Do not approach the stock market like that. What I'm going to do in this video is give you 5 reasons how you could simply jump into the stock market, help you understand what it is, and actually get you moving forward in the right direction if you want to make this a long-term play so that you can actually understand what you're investing in and why you're investing in the stock market itself. You don't want to just jump in this gambling your money away. This is not what the stock market is for. Even though it seems really cool on social media and all this stuff, you should probably do your due diligence and research if the stock market is for you if you have extra money that you want to invest. Now, before I jump into these steps, I will tell you I am not a financial advisor, so take my words as opinion only. This is what works for me personally in my life. This is how I understood the stock market growing up, and this is what works for me. So, not a financial advisor, alert, disclaimer, not a financial advisor. Take this as you will as opinion. Alright, so step 1 in getting into the stock market is do not make it your sole purpose to get rich off of the stock market. That is not what it is intended to do. If it happens, that is amazing. Congratulations to you. Lots of people get rich off of it, but lots of people also lose their entire life savings. They lose everything they've ever had in their entire life. All of their money gone in the toilet. No one's getting it back for them, and that's just the way it works. You have to be careful. If you know absolutely nothing about the stock market, that is okay. That's what I'm going to do here. I'm going to introduce you to what the stock market is and tell you why it's okay to get into it and why you need to be careful also getting into it. No one can out-trade the market. It's like going to the casino and thinking, wait, why is the casino open if everybody wins all the time? Well, it's because everyone doesn't win all the time. You cannot out-trade the market itself. Very few people can sit there and say that they trade daily and actually are in the positive. It is super duper extremely hard to out-trade the market itself. It's like going to the casino. Yes, you might win some, you might lose some, but most of the time you're going to lose more than you win. So if you're going to invest in the stock market, do not think that you need to go in there, put your life savings into it because you're going to get rich off of it, especially with how many entertaining videos there are telling you to do it nowadays on TikTok, Twitter, and Facebook, and Instagram. Do not think that this is something you need to take all your life savings and just throw it into the stock market because you want to get rich. Take a pause, breathe. There's other ways to make money. Do not think that's the reason you should get into the stock market. My personal opinion. Now, before I move forward, let me interrupt you with this awesome commercial to ask you to hit that subscribe button and make sure you hit that bell to turn on your post notifications. Make sure you like this video, make sure you share this video, and drop a comment below so I know exactly what you guys want to know about, what you're interested in, and what you're liking about these videos. Every time y'all interact with these videos, it helps me reach an audience that may not be already watching, and it just helps us grow this community and get people really excited about business and finance. So I do apologize for this segment. Let's get back to the tips that you're trying to hear. Now, step 2 is educating yourself on the different types of stocks. There's many different types of stocks that you could go into and that many people like versus other stocks. So what does that mean? How can I even understand what that is? You have all kinds of different stocks. You can go anywhere from an index fund to a mutual fund to an ETF. You can go into high risk stocks. You have penny stocks. You got blue chip stocks. You have stocks out there that people are like, dude, if you just put $1 in today, you're going to have $1 million if it goes to 1 penny. Yes, that's what you call a penny stock. There's so many different types of stocks. You've got stocks that actually make you money while you're invested in them. They return dividends. They're high dividend return stocks. There's stuff that people go into, literally, they'll just put their money into a stock because every single month they know it's going to return something and it's going to stay and gradually increase and increase and increase. There are many safe investments you can make. And I don't specifically want to say any 1 or 2 stocks that you should go into because, like I said, I'm not a financial advisor and I would hate for you to put your money into something that you don't do your own research on. You should definitely do your own research on what these stocks mean and if you actually want to invest your money in them. You should not just take someone's word for it because they seem to be a smart person. Now, if Warren Buffett or somebody like that encourages a stock, guess what? I'm probably going to go and purchase that stock he's done his due diligence. He doesn't just put his name around any stock for no reason. Make sure you understand, do your research and educate yourself on those different types of stocks so that when you go to purchase something, you understand why you're buying it and what that company stands for. Don't just purchase based off someone's opinion. It doesn't work like that. And while you may feel great off of emotion, when your money starts dwindling down and you don't see that anymore, it starts to really, really hurt. I'm not laughing because it's funny. I'm laughing because it's painful and it makes you want to cry when you see your life savings going down the drain. So in step 3, I'm going to be talking about understanding the different platforms. Where can you purchase stock? So when someone says, hey, I want to buy a share of Apple, you're like, okay, where do you do that? At the grocery store? No, it's not how it works. What you have to do is figure out what platform works best for you. There's a couple names out there that I use personally, and that is TD Ameritrade, E-Trade, and then something like Robinhood. Robinhood really simplifies everything for you and lets the user just trade and trade and trade without too many hoops and things to jump through. All you have to do is do your due diligence. Research what platforms are good for you. Some have certain types of fees, some don't have fees, some have better advantages, and that's just for you to decide what works best for you. It's like when you're choosing a bank. You're just sitting there going, okay, is this going to work? Is that going to work? Do I like this bank? Do I like this platform? Do I like their app? You just need to go in, do some research and see, hey, what platform do I want to use if I want to start trading on the market? What do I want to purchase stock through? And that's all it is. It's not a terribly hard decision, but you still need to make sure that you're actually trusting your own judgment and actually doing your own due diligence and your research so that you can pick something that actually works best for you and what you like and what benefits you the most. Don't just take people's word for it. Yes, experience is great, but just go on and make sure you do your own research. Now, step 4 is extremely important, and it is to set your goals in place before you enter the stock market. Why do I say that? Because it is extremely important that you stay true to yourself throughout that entire process. There's going to be days where you're like, man, you jump on there and you see something and you want to sell or you want to buy and you see people talking about stuff and there's a lot of commotion. But if you set a certain set of rules up, if you set your goals in place before you get into it and you stick by them, you're going to be prone to losing less money if that's ever the case. But if you're sitting there and you're like, oh, I'm going to start daily trading, I'm going to start doing this and I'm going to start doing that, and then you see a spike, so you sell, then you're like, oh crap, it's going back up, and you buy high and then you watch it drop down. Seeing things like that just freaks people out. We're human, we have emotions, so it makes you want to buy and sell because your friends are talking about this and they're talking about that. And I'll go into a little bit of what my portfolio looks like, but without certain rules set in place, you're going to want to go and do things that are irrational. That's just how the stock market works. It's like when you're at the casino, and I've used that example. It's like when you're there and you just start gambling and you're like, hey, well, I got lucky that time, so guess what? I'll get lucky again. Well, guess what? The house wins usually, so that's why they have the casino. They're in business because they're good at taking your money. So that's how you have to view the stock market. Don't just sit there and gamble your money away and think that, oh, without any rules, this is going to be easy and I'm just going to be set in place and my future is going to be perfect. No, if you make the right choices and you actually set yourself up for success and you do your research on which stocks you want to purchase, how long you're going to hold them, what's going to happen. Do things happen? Of course. Did the economic crisis happen in 07, 08, and then kind of just go into the next couple of years? Absolutely. Did people have to sell because they needed money? Absolutely. But guess what? In most cases, you can set a place, have rules in place that are going to help you for the long term. Alrighty, step 5 for me is to think long term. Don't think short term. This is not a get rich scheme. This is not something that you're just putting money in because it's going to return 150 million% in the next week. This is a long term play. Do things that make sense, literally here, and then make sense in your wallet. Do not just do things because you're being irrational, and do not just do things because you want to. That's not how the stock market works. You're going to get lucky sometimes, but then if you actually educate yourself on a lot of things, you'll actually set yourself up for a pretty awesome future. When you turn whatever age that is and you want to pull out whatever you have in that, let's say it's a Roth IRA, or you have your own just regular trading account where you're like, hey, I don't care that I have to pay taxes on this. It doesn't bother me at all. I'm just going to do this for the next 10 to 15 years, stack my money up and continue to grow. And then all of a sudden you have a good nest egg because you actually did your due diligence and researched what actual stocks make sense for you, what you like, where you feel comfortable, what actually gives you a good dividend, what actually pays out well, and what has a good track record to keep growing. you need to actually take the time to understand that this is a long-term play. So if someone ever says that the stock market is just way too easy and you can get rich and do all these things, they've probably lost a lot of money and they're trying to scam you into something. So be very weary on what you're going to listen to from people, what advice they're giving you, and how you go about doing it, because it is not something you just need to throw your money into. And because we live in such a digital world, you see your money go from your bank account to this thing and then you might lose it, and it doesn't hurt as bad as if you were just giving cash away. But you need to understand that this is money that could have gone into a house, or this is money that could have gone into putting food on the table. And a lot of people actually, get really depressed over losing so much money in the stock market. I mean, it can get really, really bad, but then a lot of people can be extremely excited about making a ton of money. But like I'm saying, think of it as a long-term play versus a get-rich scheme. Now, to end off this video and give you an idea of what's in my portfolio, I actually own some shares of Apple, I own some shares of General Electric, I own some shares in some ETFs, SPY, Bank of America, I have that. These are just stocks that I've accumulated over the years, and I've just wanted to continue to grow those. Those are, trustworthy brands. There's penny stocks that I've also invested in and lost money in. But when you actually invest in trusted companies like Apple and Bank of America and GE and other companies of that sort, you actually just see this growth. It's slow growth, but it feels good because you're like, wow, 5 years passed. I lost money on my penny stock, but if I would have bought Apple 5 years ago, or Netflix, or whatever these awesome stocks are, you're like, wow, this company would have made me a lot of money. So you do learn, you will lose some money, you'll grow some money, you'll gain some, lose some, you win some, you lose some in life. That's just how it goes. But just make sure you do that research. I cannot emphasize that enough. And look into companies like Apple or whatever it is, Bank of America, whatever companies you trust, and just see if those companies would work for you. And yes, if you see it dip for a little bit, don't worry, like, it's gonna grow. If a company is actually, in good standing with the economy and everything like that, you're gonna continue to see it grow. The world's just in a crazy point right now where things are up and down and up and down. So don't let that scare you away, but just be weary and do your due diligence and research. However, with all that being said, I hope you enjoyed this video, and I will ask you again to please hit that subscribe button. Make sure you hit that bell and turn on your post notifications. Make sure you like this video, share this video, and drop a comment below so I know exactly what you guys want to talk about, and so we can keep reaching a wider audience all around the world and getting people really, really, really excited about business and finance and what all it can do for you. So without further ado, thank you so much for watching this video. I'll see you on my next one. Peace out.